Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And friends, we do this each week right here, same time, same station. It is our goal to bring you the information, the data. I mean, the real stuff, not the crazy headlines, but beneath the headlines is the truth, right? The data, the tips, the tricks, the strategies, all the information that you need so you can go out there and make better real estate and mortgage decisions for you and your family. Again, my name is Mark-eitel. This is the Mr. Mortgage Show, and I am joined, as always, by my lovely producer, Jennifer. Jen is womanning the Anytime Hotline. If you've got questions, you can shoot them via text or give us a call at 855-462-7292. That's 855-462-7292, and she will get your questions on the air. Man, we have a great show lined up for you this week. This is the first show of 2023. My God, can you believe it's 2023? I remember in 1999 on New Year's Eve, we were all anticipating the grid shutting down, and we remember that Y2K, we weren't going to be able to use our bank cards. People were filling their bathtubs with water and growing their vegetables in the backyard thinking, man, it's the end of the world as we know it. And bam, here we are 23 years later. That is crazy, crazy, crazy. Now everybody's talking about the end of the real estate world, kind of the same way, right? But I believe the outcome will be the same. Much to do about nothing. And we'll dig into that this week. There's a lot of data out, closing out the year, a lot of housing and interest rate forecasts, which if you tuned in last week, we talked about that. The forecasts, how wildly inaccurate they were for 2022, and I'm not seeing any more clarity from the gurus in 2023. So, you know, interest rates could be 10% or they could be 5%. So you need to govern yourselves accordingly and just look at the data that's right in front of you. But another super interesting week in housing news to kick the year off. You know, no surprise, big headlines around mortgage applications are down, housing sales volume is down. But guys, they're using year over year data, and we're still comparing this year to the frenzy of the pandemic. But if you take the chunk of, 2020, 2021, and 22 out of the market, we're looking pretty normal. It's not as scary as people think. It's just, when you're going 100 miles an hour down the highway and you slow to 60, yeah, that feels slow, but you're still motoring right along. And that's kind of where we are right now. Appreciation is slowing, but we are still seeing appreciation year over year. And interest rates are what they are. There's no end in sight on that one at the moment. But the good news is they've kind of settled in the, 6.5-ish range. Could be as high as 7, could be as low as the low 6s. But guys, we're using that rate buy down strategy all the time, and it's making a huge, huge difference. So you hear me all the time talk about reading past the headlines and digging into the data, and I want to share something with you. So there was an interesting headline that I read this week that said mortgage rates drop modestly to start the new year. That's left up to the reader's interpretation of what that means. But if you read the data in the article, and guys, this was published by Mortgage News Daily, and I'll post it to the Facebook page. And if you're looking for that Facebook page, just go to mrmortgageradio.com. There you'll find everything, links to the Facebook page, all the data, the podcast, everything lives at mrmortgageradio.com. But here this article said, mortgage rates drop modestly to start the new year. Now, on the surface, what is modest? What is drop? That sounds like, rates are in a downward trend. Well, yes and no. Here's the thing. That modest drop equated to 0.09%. So less than 0.1% of a drop. So what does that mean? Let's use this example. Again, less than 1%, so 0.9. So if you were to borrow $500,000 at 6.5%, you've got a mortgage payment of roughly $3,164. If you were to borrow that $500,000 at 6.49%, you've got a mortgage payment of roughly $3,157. So by my calculation, that headline means you would have saved $7 a month. Now, if you're one of those people that are waiting on the sidelines for this big drop in interest rates, that headline might have given you some hope that interest rates have dropped and you're going to see a savings. Well, I hate to say that the difference between 6.49 and 6.5, half the time you're not even going to see that on a rate sheet adjustment. You're going to get the 6.5. But anyway, even if you did get that minute down tick, you're going to save $7 a month on a $500,000 loan amount. Here's what's far more exciting to me. If you take that same $500,000 loan amount and you use the interest rate buy down strategy, not the 3-2-1 buy down, but a permanent buy down strategy, and you bought that rate down to 5.5%, now that payment is $28.39 a month. That's a big savings when you start looking at saving $200-$300 a month, depending on the loan amount and the interest rate. That could save some significant money. So I'm sharing that story only because right now, with all of the scary headlines, the sellers are thinking, oh my God, we've got to get aggressive. We've got to cut our prices, or a lot of sellers are doing this interest rate buy down strategy. And that's making a big difference in moving the needle for buyers. So I'm cautiously optimistic moving into 2023. We still don't have a lot of supply coming to the market. If you look at the supply-demand equation, we're still on the light side for inventory. We're just not seeing enough inventory come to the market to trigger this crash. So I'm encouraged by what seems to be a stabilizing interest rate environment. And I think that's the big thing. Just tell us what the rules are, right? Tell us where we are. I think a lot of people were super frustrated by that big uptick in interest rates, and that got everybody, super concerned. But now that we've been here for a few months, kind of bouncing around in this channel, if you will, I think people are starting to feel more comfortable with the idea of borrowing money in the 6s, because historically, guys, that's still a great interest rate. But I get it, 3 is super sexy. And there's strategies to get the rate down. Not in the 3s unless you do one of those 3-2-1 buy downs, which if your time period for owning the property is a shorter period, that may make sense, because with that buy down strategy, you could get a start rate in the 3s, which is, super exciting. But anyway, I share all that just for you to remain positive and encouraged, and always, always, always read past the headlines, because the data lives underneath that. And here's another example of that. That headline equated to less than 0.1% in rate movement. So not even worth writing about in my mind, but nonetheless, it made the headlines. Here's another crazy headline. Canada is implementing, or has just implemented, I haven't done all the research on this one yet, but I find it truly fascinating, that they're limiting foreign buyers and investors in certain areas in Canada from buying properties, because institutional investors and foreign investors are buying property and speculating on this big run-up in appreciation. And they're saying that homes are being left vacant while they appreciate, just so they could be sold at a, flip, if you will, at a higher value later. And the Canadian government has come out with what I believe is a catchy headline: homes are for people, not for investors. So I don't think, government intervention is, in my opinion, the first go-to answer. I really, really believe a free market system governs things. But what might have been a better strategy was some monetary policy that didn't push interest rates down into the low single digits, which encouraged foreigners and investors buying property, not only in Canada, but all over the U.S., because we saw what it's done to our housing market. But anyway, guys, we've got an amazing show lined up for you. I know Jen's already getting some questions over there, so sit tight. This is going to be a good one. Happy New Year, everybody. Let's kick off 2023 together. Hey, you hear the music? You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the Mr. Mortgage Show.
Hey, it's mark-eitel here, and I am going to interrupt this commercial break to ask you for a favor. If you've got any friends or family or coworkers who are talking about buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me and my team. You can simply share the link, Mr. Mortgage Radio. That's MrMortgageRadio.com. I'd welcome the opportunity to help them any way we can. Now sit tight. On the other side of this break, we'll be back with the show. Again, it's mark-eitel, NMLS 1929005.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel. This is the Mr. Mortgage Show, and if you've got questions or comments, the Anytime hotline is 855-462-7292. Call or text 855-462-7292. That is the Anytime hotline. If you prefer to shoot us your question via email, check out MrMortgageRadio.com. That's MrMortgageRadio.com. On the bottom of the page, there's a little email icon. If you click that, you can shoot us your questions via email. And as I mentioned, Jen, my producer, is womaning the email line, the hotline, the board. She's even looking out the door for the pizza man because I'm hungry. But anyway, we do this each week right here, same time, same station. Super, super grateful for you spending a little bit of your day with us each week. And as I mentioned, it's our goal to bring you the info that you need so you can make better real estate and mortgage decisions for you and your family. But guys, we're super excited about kicking the year off with you. So let's dive right into your questions. I know Jen said we had some questions teed up when I was talking to her during the break. Hey, Jen, what do we have?
Pete is asking, is it possible to get a mortgage on a mobile home on a 2.5-acre lot?
Hey, Pete, that's a great question. Hey, Jen, your mic sounds like you are in a tuna can. And I know during the break when you were on the mic here by the board, you sounded much better. So I don't know if that'll reach over to the hotline or not. But yeah, let's check that out. That sounds a little tin canny to me. But yeah, guys, I swear Jen's not in a submarine. Anyway, back to Pete's question. Yeah, Pete, so to answer your question, the big thing with mobile homes or manufactured homes is, I guess let me make sure we're talking about the same thing, because some people call it, a mobile home a trailer. And by definition, the wheels need to be off. It needs to be permanently affixed to the land, right? So it needs to be attached with all of the proper anchoring and the skirting around it so that when you walk up on it, it looks like a house. But yes, assuming that we're talking about a manufactured home that's permanently affixed to the land, yes, you can get a regular mortgage. You can get an FHA, a VA, a conventional loan, even a USDA loan on a manufactured home. Now, here's the big caveat. You need to own the land, right? So it's not a situation where, and it sounds, Pete, like that's the case for you here in this circumstance, but you do need to own the land. You need to be buying the dirt with the physical structure, and they need to be deeded as real property. And to differentiate, sometimes you'll see situations where people are selling manufactured homes, but they're in a park and you pay lot rent. Well, that's not real property. So there's a very different foreclosure process. And in that instance, it's not foreclosure, it's repossession, kind of like a car or a boat or a camper. So in that instance, if you're not buying the dirt and you're leasing the dirt, that's not a property that's eligible for a quote unquote mortgage. But if you're buying the dirt, that's eligible for a mortgage. Now, the other caveat, and this is the big one, it needs to be newer than 1977. And you've heard me say it before. I know technically it's the summer of I think it's July of 1976. I don't know the exact date, but I say 1977 because few people know the month of manufacture of a manufactured property, but most people know the year. So if it's 1977 or newer, it's eligible for mortgage financing. And there are a few other inspections that go into a mortgage process with a manufactured home. They make sure that it's affixed to the land correctly, and whatever wind zone it is, they look at the anchoring. It's not a big deal, but it is just one additional step. But yes, sir, to answer your question, that property type is eligible for all of the mortgage products. So hopefully that helps. If you need more information, you know how to get us. 855-462-7292 is the Anytime hotline, or MrMortgageRadio.com has all our contact information there as well. So check that out if you need us. But Pete, I appreciate that question, my man. Hey, Jen, can we get another question in?
Jane sent this one. I just finished paying off all of my credit cards. I was going to close them, but my brother tells me that will hurt my credit. Is this true?
Hey, Jen, that didn't help. It still sounds crazy. But yeah, that's a brilliant question, Jane, and thank you so much for that. And let's dive into that really quickly. Your brother is absolutely correct. So there are several scoring criteria in your credit report model, if you will. One of them is age of credit. So if you've got an old credit card that you've had for 10 or 15 years, the age of that credit is a scoring factor. So leave it open. Pay it off, but leave it open. Cut it up, put it in the freezer, whatever you need to do so you don't use it again. But by closing everything out, now if you're closing out old credit cards, you're reducing your average age of credit. That's going to lower your score. So your brother is absolutely right. Another factor that goes into your credit score model is the available credit to the outstanding balance. So let's say you've got 5 credit cards, all with $1,000 of available credit, right? Credit lines of $1,000. Let's just make easy math of this for me. So you've got 5 of those, and you just paid 4 of them off, and you're going to close them out. And that 5th one has a credit balance of, let's say, $700 on it. You're still working on that one. Well, right now, with all of them open, you have $5,000 of available credit with a $700 balance. So that's a very low ratio. But if you close all of those credit cards out that are paid off, you now have $700 against $1,000. You have 70% of your available credit is being used. That's going to pull your score down. They like to see that number as low as possible. Traditionally, we've said 30%. I've heard recently as low as 15% is the target goal. But I always encourage clients to keep that balance as low as possible. Try to pay off whatever you can each month. And with those cards that you paid off, use them for your gas or your groceries and just pay it off, each month so that you're not carrying interest on it, but you're keeping it active. So your brother's absolutely correct, and I caution anyone who's just paid off a bunch of debt to just make sure that you're not closing those credit lines out, especially if you're in the middle of a mortgage process, because you don't want to do anything that's going to change your scoring model in the middle of the process. Here's another thing people do, and it sounds on the surface like it's the right thing to do. You'll have an old charge-off or an old derogatory item, right? Here's a perfect example. I've got a client who co-signed for their daughter's cell phone quite some time ago, right? And she didn't pay the bill, and it went into collection, and they disconnected her service, and whatever happens, right? But now there's a $100 charge-off on my client's credit report from his daughter's bill from years ago. So we go through the credit report, and it wasn't preventing them from qualifying. No problems, no issues. But they were made aware of it and decided they wanted to do the right thing and pay it off. Well, here's the thing. Most recent activity is also a scoring criteria. So there had been no activity on that charge off for years. And then all of a sudden they make a payment on it, and that charged off accounts, even though it's a paid off account, now its most recent activity is today. So that pulled their score down. Thankfully, it didn't pull them out of the qualifying parameters for the loan program, but just know that that is also something to be mindful of, because that could be an issue, and I've seen it bite people in the butt in the past. So I just wanted to share that one too, because that's another one that's misunderstood. But guys, if you ever have questions about anything along those lines, you can always give us a shout or shoot us a text or an email. So anyway, guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, my name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, you can call or text your questions. He always forgets that. Call or text 855-462-7292. That's 855-462-7292. That is the Anytime hotline, and that's how you get your questions on the air. Jen is womanning that hotline, and she'll take care of you at 855-462-7292. Or check out MrMortgageRadio.com. That's MrMortgageRadio.com. And if you scroll to the bottom of the page, there's an email icon. If you click that icon, you can send your questions right here to the studio via email, and she'll get you on the air that way too. But during that last segment, we were talking about paying off your credit cards and then closing those accounts. And I was talking about that's not a good idea. That'll lower your scores. So I hope that helped. I just wanted to double back to that, because any change in your credit profile, even if it's something that seems like it'll logically help, like I mentioned, the payment of the charge-off account and how that actually hurt the credit score. So just be mindful of that. And if you've got any questions, you can always reach out to us. I wanted to say thanks for that question, because credit is a misunderstood, mysterious monster. And we need to talk about that more, because man, oh man, a few points here or there can make a huge difference in the program that you qualify for and the interest rate that you can get. You know, for example, that FHA 100% first-time homebuyer program that we talk so much about has a 640 credit score threshold. And we've got some clients who are in the 630s, and they qualify for FHA. I mean, FHA, you can qualify all the way down into the 500s. But that particular loan program has its own set of overlays, which require a 640. So the good news with that particular client is we've got what we call a what-if score simulator. So when we're in reviewing credit, we can play with the simulator and say, okay, if we were to pay the Visa card down $500 or pay this off, what would that do to the score? And oftentimes with just, modest reductions in balances here or there to get them under those target ratios, as we talked about, we can get the score up where we need it to be to qualify for a program. So every point counts when you're managing and monitoring your credit. So I always appreciate questions about that because we don't talk about it enough, and it's something to be mindful of. It really affects your interest rate, which affects your payment, which affects your buying power. So great question, but on with more questions. And guys, we tried to fix Jen's mic during the break. No luck. She's going to sound like she's phoning these questions in from a submarine this week, but we'll get it figured out. We're moving into our new studio, so there's still a few quirks for us to work out, but bear with us. But Jen, what do we have question-wise?
Will wants to know, my insurance company is dropping my policy. My insurance is part of my mortgage payment, so I'm not sure what to do next. I have 3 months to get insurance. Should I call my mortgage company? Thanks.
Hey, Will, I am sorry that you're going through that, brother, but you are not alone. I mean, man, oh man, we're hearing that almost every week from clients who are going through this, especially clients in the coastal regions, right? If you're in Florida or Louisiana or Texas, prepare for this letter or this phone call if you haven't gotten it yet, because insurance companies are just saddling up and riding the heck out of a lot of these areas. But here's the thing, and this goes for anybody who wants to change their insurance company. If your insurance is being paid as part of your mortgage payment, the very first thing you want to do is go out there and find that competitive policy with the carrier that you want to switch to, right? That's number one. Then you want to notify your mortgage company that you're changing insurers. So oftentimes you'll just cancel the old policy, put the new policy in place, and then the mortgage company, you will have notified them so they know, and notify the insurance company who your mortgage company is, because the loss payee clauses are going to have to include the mortgage servicer and the mortgage lender. But yeah, it's a fairly easy process. It involves a handful of phone calls. When I say easy, let me rephrase that. It's a fairly simple process. Nothing is easy when you're on the phone with your mortgage or your insurance company, but it's simple to do. And you can do it at any time. You don't have to wait until renewal or cancellation. Although, guys, it's always easier to do it at renewal because all of that escrow money necessary to pay for the policy is already in your escrow account. So you don't have to stroke that check for the new policy. If you've gotten this letter, almost always it's going to be canceled at renewal. So if you get your new policy in place with a start date at the cancellation of the current policy, and that new policy can be paid from your escrow account, that's the easiest way to do it. But I hope that helps. I know that it can be complicated and confusing. So as always, I extend to you, if you need help or more information, call or text us at 855-462-7292, or shoot us an email. And you can find the email by visiting MrMortgageRadio.com. But hey, let's throw it over to the submarine and get another question from Jen.
Here's a question from Cindy. I listened to your podcast about using a reverse mortgage to buy a home. How does this work?
Hey, Cindy, that is a great question. And we need to do a full show on reverse mortgages. Actually, you know what I'm going to do? I'm going to do a podcast episode just on reverse mortgages. And if anybody wants to check that out, go to MrMortgageRadio.com and click on the top link, and it'll take you to the podcast page. Give me a little bit of time to get it up there. There are episodes up there now speaking to this, so maybe search the library for reverse mortgages. But I'm going to do one specific around all of the nuances of purchasing with a reverse and then the refi strategy. But anyway, let me answer your question before I get too sidetracked. Here, I'll give you a real world example of a client that we're working with right now. She's in a home that's worth $500,000. She's got about $75,000 left on her mortgage. She's going to sell the property and walk with about, let's call it $400,000, right? So she doesn't want to take that $400,000 and go out there and buy a $400,000 property and have no cash in the bank. And she's not very excited about going out there and putting a down payment down on a property and having another big mortgage payment, even though in that scenario she would have cash in the bank. So what she's settling in on is taking approximately $200,000 of that putting it in the bank, taking the other $200,000, and these numbers can vary a little bit based on your age, but she's looking at a $400,000 property. So she'll put $200,000 down on the property, $200,000 in the bank, and then take a reverse mortgage at closing as a purchase mortgage and never make a monthly mortgage payment. So it works the same way. It's based on the equity position, but when you're purchasing it, you're obtaining that equity position with your down payment. So I've seen it as little as 35% down. I've seen it as much as 50 or 60% down. Again, it depends all on your age. So I hope that helps. And if you have questions, give us a call. I'll be happy to walk you through it. You can always check out that website, moreaboutreverse.com. There's a link there. You can request more information. We'll send you a packet. You can read through it, get comfortable with the idea, and then you'll be in a better position to ask questions. And we're always open to spending as much time with you as you need to walk through it. Because if you've heard the show before, you know what a place in my heart the reverse mortgage carries. And it's not right for everybody. I say that all the time, and you really need to make sure it's the right move for you. And if it is, man, oh man, it can change your life. It can just take the burden of those monthly payments away. And I mean, a lot of times you can even generate cash flow with a reverse mortgage. But anyway, I hope that helps. That's a great question. I always appreciate talking about reverse mortgages. They are a very, very unique and interesting loan product. And now, in the face of all this inflation, we're seeing them make a difference for a lot of people. But anyway, guys, you hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show.
Hey, it's mark-eitel here, and I am going to interrupt this commercial break to ask you for a favor. If you've got any friends or family or coworkers who are talking about buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me and my team. You can simply share the link, Mr. Mortgage Radio. That's MrMortgageRadio.com. I'd welcome the opportunity to help them any way we can. Now sit tight. On the other side of this break, we'll be back with the show. Again, it's mark-eitel, NMLS 1929005.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to mark-eitel and the Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are tuned into the Mr. Mortgage Show. And friends, it is always our goal to give you the information, the data, the tips, the tricks, the strategies that you need to go out there and make better real estate and mortgage decisions for you and your family. And man, oh man, we are so grateful that you chose to spend a bit of your day with us. We will do our very best to answer all your questions, and you can get those questions to us by calling or texting 855-462-7292. That's 855-462-7292. And Jen, my producer, although she sounds like she's 20 leagues under the sea in a submarine, is sitting right across from me behind the glass, manning the board. Womanning the board and womanning the Anytime hotline. Guys, we just moved into our new studio and we're working out some of the quirks, and sadly her microphone sounds like a tin can today. So bear with us as we get through this, but yeah, her brilliance still shines through the crappy microphone today. So anyway, I'm going to throw it over to Jen. We'll keep your questions rolling. Hey, Jen, what do we have?
Jerry sent us this. We're ready to start looking for a house. So I have two questions. How long does the pre-approval take? And how long is the approval good for?
Hey, Jerry, that is a brilliant question, my man. And first, let me say congratulations on starting the house hunting journey right here to kick off 2023 and getting on that equity train, right? Because man, oh man, we read a report earlier this year that showed the average U.S. homeowner had almost $250,000 in net worth, while the average U.S. renter had $6,500 in net worth, which was mind-blowing to me, that wide difference. However, I know a big chunk of that is equity. So the sooner you can get on that equity train, the better. And it sounds like you're raring to go. But anyway, to answer your question, the pre-approval portion can happen very quickly. It really comes down to how quickly you can provide all your documentation to your lender. Things like your W-2s, your pay stubs, your bank statements. Once they have all of that documentation, they review your credit and run you through the underwriting system, and the underwriting system will generate your approval. You're almost as good as cash at that point, assuming nothing in your profile changes, right? You keep your job. There's no big withdrawals from your bank account. Everything is as it was when you applied. You're pretty much good to go at that point. And that can happen in 24 or 48 hours, depending on, again, how quickly you can compile and get that documentation into your lender. And then to answer the second part of your question, how long is that approval good for? It can be good indefinitely. Typically what happens, and we're now doing it weekly, although we used to do it monthly, we'll review the approval and double check the interest rate, because as interest rates go up, your payment goes up. So if you're locked into a $1,500 a month payment is going to be the maximum amount you can qualify for. Well, as the interest rate goes up, that loan balance might come down. So each week we check that to make sure everything still lines up with your goals. But typically that's done monthly. And each month you're going to want to provide fresh copies of the most recent bank statements, the most recent pay stubs, so your file is as current as possible. And that way your lender can be assured that nothing has changed in your credit profile. And then your lender can be assured that nothing in your credit profile and your income profile and your asset profile has changed. So that approval is still rock solid. Then you just have to plug a property into the equation. Every 90 days, you're going to want to refresh your credit. And that's as simple as doing what's called a soft pull or a soft inquiry. That does not lower your credit score. It just, again, allows the lender to confirm that nothing in your profile has changed, which is the most important part of that. So, that's pretty much how it works. You're looking at every 30 days a refresh, every 90 days a credit refresh, and then as long as you're keeping your documentation current, your lender can move quickly. And guys, once you've reached that process where you've gotten the underwriting approval, you can close in days. I mean, it really comes down to how quickly you've identified a property, how quickly it can be appraised, how quickly the insurance company can put that policy in place and have a bind date chosen, and how quickly title can get it together. And that's, 12, 15 days sometimes. So that gives you buying power. That shows the seller that you are ready to rock and roll. And right now, sellers are negotiating again. So being fully approved and ready to go, put yourself in a seller's position. If you went out there and you found an opportunity this weekend and you were going to buy a house and your offer came in at $300,000, fully approved, ready to go, just need to plug in the property, and another offer came in at, $305,000, but they haven't gotten approved. There's uncertainty around it. The seller may lean your way because you're the solid offer. So I always encourage people to take that step and go all the way through to be pre-underwritten. So all you have to do is plug in the property. And if one thing lives on out of this crazy COVID world, I hope it is that we continue to fully approve buyers to fully approve applicants before they go out there and get themselves into contract. Because during the height of the pandemic, if it wasn't a cash offer, buyers were looking for full approvals. If it wasn't a cash offer, sellers were demanding full approvals. And I think that's powerful. I think that puts you in the best position as a buyer to negotiate. And buyers have flex again. Buyers are out there throwing their weight around. And if you are, fully approved and ready to go, it gives you more weight to throw around. And we're seeing people win with that buy down strategy. We opened up the show talking about how movements in interest rate can affect the payment. And we talked about buying the rate down in that example, a full percentage point and saving, I think it was around $300 a month. I'll have to look at my notes, but I encourage you to go through the process. But to answer your question, the approval process can happen in a day or two, and then it can remain in effect as long as you maintain the documents in the files. So hopefully that answers your question. It was a great one. I appreciate that. And guys, if anybody has questions around that, just give us a call or shoot us a text, 855-462-7292, or check out MrMortgageRadio.com. That's MrMortgageRadio.com. There's loads of information there. There's the podcast, the Facebook page, all kinds of stuff, but also, too, our contact information. You can give us a shout or shoot us an email, and we'll be happy to answer any questions that you have. But, hey, you hear the music? You know what that means. That's my cue. Sit tight. We'll be back in a few. On the other side of this break, we'll be back with more of the show and more of your questions.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Paradise is closer than you think. West Building Contractors can help you create your perfect piece of paradise. They have mastered the art of pavers, hardscapes, summer kitchens, pools, and more. For a free design consultation and quote, visit westbuildingcontractors.com or call 772-284-6994. West Building Contractors offer new construction, luxury additions, and remodels too. That's 772-284-6994 or westbuildingcontractors.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And it is always our goal to give you the information, the tips, the tricks, the strategies that you need so you can go out there and make better real estate and mortgage decisions for you and your family. And we appreciate so much that you spend a bit of your day with us each week. We do this right here, same time, same station each week. And I am joined, as always, by my lovely producer, Jen, who is, believe it or not, right across the glass from me, running the board, the hotline, the email line, but she sounds like she's a million miles away. Guys, we moved into our new studio. We're still working some of the bugs out. Yeah, and I got my side all done first, so we got to get her fixed up on the other side of the glass. But man, her mic sounds a million miles away today, but she's still right here bringing your questions to us on the air. And if you've got questions or comments, call the submarine at 855-462-7292. That's 855-462-7292. She'll read your questions on the air, or visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll all the way to the bottom of the page. There's a little email us. There's a little email icon there. If you click that, you can email your questions to us and she'll get them on the air. Again, 855-462-7292 is the hotline. But hey, let's keep your questions rolling. We've had some great ones so far this week. Super excited. You guys are bringing the great questions as always, but let's keep it rolling. Hey, Jen, what do we have?
Jamie sent this one. I drive Uber as a side job. Can I count my Uber income on my mortgage application?
Hey, Jamie, that's a great question. I've got two questions for you. The answer is yes, if you're claiming that income on your tax returns, and Uber's pretty good. You're usually getting a 1099, so that's most likely claimed on your tax returns. But if you're claiming that, and I guess this goes to any side job, side hustle, if you will, side job income, part-time job income. If you've been doing it for 2 years, it's been consistent, and you're claiming it on your tax returns, then with a traditional mortgage product like FHA-loan or a conventional loan, you can use that income. In some instances, as little as 12 months of history, but you're going to look for consistency and claiming it on your tax returns. If you're not showing it on your tax returns, there may be alternatives with bank statement loans. But to answer your question, there is a very good chance that you can use that Uber income, assuming those couple parameters are met. So brilliant question. If you need more information, you can always reach out to us. But hey, Jen, do we have another question?
Brad is asking, I had a bankruptcy in 2018. How long before I can apply for a mortgage? My landlord is hiking my rent again.
Hey, Brad, that is a common theme that we have heard this year, and I don't think landlords are going to slow down anytime soon. Man, oh man, some of the rent hikes in some of the markets that we serve have been just mind-blowing. Anyway, to answer your question, if your bankruptcy was discharged in 2018, and guys, if you're in the same circumstance as Brad, you're going to want to look at your discharge date, not the date that you filed, but the discharge date. That's the important mark on your calendar, if you will. And then the other thing to be mindful of is what type of bankruptcy did you file? Was it a Chapter 7 where everything was just, charged off, dismissed, and there's no obligation to repay? Or was it a Chapter 13, which is more a restructuring of debt where you're paying the court and they're paying your creditors for you? Now, you can get, with a Chapter 13, you can have 12 months of on-time payments to the Chapter 13 reorganization and be able to qualify. So to answer your question, if it was a Chapter 13, it would be a year, or you could go one day after the 13 was closed out or dismissed. So if it was a 13, you're good to go now. If it was a Chapter 7 that was dismissed in 2018, you're in good shape because with FHA and VA, you're looking at 2 years. USDA is 3 years, and then conventional is typically 4 years. So there's a very good chance that you are ready to rock and roll. So watch out for the date, though. Make sure you're looking at the discharge date and not the file date. With FHA, you're looking at as little as 2 years on Chapter 7 or as little as day after on a 13. So with those assumptions, I think you're in good shape to apply now. So that's a brilliant question. I encourage you to get out from under your landlord's finger and, jump in. So if you have questions, you can always reach out to us. 855-462-7292 is the Anytime hotline, or check out Mr. Mortgage Radio and shoot us an email that way. But hey, Jen, what else do we have over there?
Courtney sent this one. I've heard if we sell our house and invest the profits into a new house, we won't have to pay capital gains taxes. Is this true?
Hey, Courtney, that's a brilliant question. So I need to know a little bit more. Is this your primary residence? If it is, how long has it been your primary residence? Because if it is, and it's been your primary residence for, I believe it's 2 of the last 5 years. I'll double check that and post it to the Facebook page. I'm almost certain it's 2 of the last 5 years. If that's the case, then you can take up to $250,000 as an individual or $500,000 as a married couple, capital gains tax free. So you don't even need to reinvest it. If you're talking about an investment property, then there's a vehicle called a 1031 exchange where if you take the profits from your sale, put them in a 1031 exchange escrow account, and there'll be a facilitator, an attorney or a title company can help you with finding somebody to facilitate the exchange. You then have a certain amount of time to identify and close on a new property, put that money in the new property, and then you're just deferring the capital gains. So if you're talking about an investment property, then yes, you're going to reinvest those profits through what's called a 1031 exchange. But if it's your primary residence and you meet those requirements of the time that it's been your primary, there's a good chance that you can take at least a large chunk of that money gains free. So I hope that helps. If you need more information, I can get you in touch with a real estate tax attorney or a CPA to answer it in greater detail. Or if you want to talk more on the mortgage or real estate side, you can always reach out to us. But man, brilliant question. And congratulations on having a big bunch of profits to worry about paying gains on. Well done. Hey, Jen, do we have another question?
Francis has a question. I heard you talking about someone you helped buy a 4-unit building with a 3% down payment. Can you explain this again? Thanks. You guys are awesome.
Hey, Francis, you're awesome too. Thank you for that. I think what you're talking about, it might have been last week or the week before. I'm working with a first-time home buyer. She's a young woman who is determined to buy a 4-plex for her very first property. And she sees the value in the rental income from the other 3 doors. And we're using a primary residence loan product to accomplish that for her. So, guys, you can use a traditional loan to buy a duplex, triplex, or 4-plex if you intend on living in one of the units as your primary residence. And that's exactly the scenario here. She doesn't want to buy a house to start with. She wants to buy a 4-plex, generate rental income. And this is a smart young lady. She's looking in an area that's very close to the college campus that she just graduated from because she knows she'll get premium rents from parents, right, who are paying for their students to go to school. She's not too concerned about collecting those rents on time each month. So it's an interesting strategy. But yes, we were just talking about her. I think it was the show before last. And if you missed that, you can check out MrMortgageRadio.com for more information. And guys, we have put together a program where we're helping parents of sophomores, and we're using sophomores because oftentimes freshmen have to live on campus, but we're showing them how they can buy investment property, allow their children to live in that property and rent the additional rooms out to other students. They're generating a profit and saving tuition that they would normally pay for their children to be in college. So there's a lot of great opportunities around real estate. I don't care what interest rates are. I don't care what the market's doing. There's always somebody who's finding an avenue to success in the market. So brilliant question. I certainly do appreciate that. We've had some great questions today. I thank you so much for your participation. Uh-oh, you hear the music? You know what that means? We just wrapped up the first show of 2023. My God, where has the time gone? We certainly appreciate you being with us. If you need us during the week, give us a shout, 855-462-7292. That's 855-462-7292. Or check out MrMortgageRadio.com. That's MrMortgageRadio.com. But hey, guys, I'm going to ask you a favor. If you've got any friends or family or coworkers who are thinking of buying or selling real estate or refinancing, they got questions, you think they would benefit from the show, I'm hoping I can count on you to introduce them to me, to the team. Just share the MrMortgageRadio.com link. That's probably the best way, MrMortgageRadio.com. And as always, if you need our help, we would be honored to be a part of your journey. If you can hear my voice, we should be your choice. Check out MrMortgageRadio.com. With that being said, guys, have an awesome week. We'll be back right here next week, same time, same station.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.